So you're new into day trading and you have a small amount of money and you want to grow that as quickly as possible. Not everybody has $10,000 to open up their first Forex account and like trade, the proper way. So in this video, I'm gonna teach you how to grow a small Forex account in a quick and efficient way. Welcome back to the channel, everybody. My name is Artie, and this is the moving average.
Perhaps you have been wondering if you can double your trading account. Yes, you can double your trading account very fast. In this video, Artie from the moving average will show you. Now, this video is actually titled How to Grow a Forex Account by the Moving Average. The moving average is a very interesting channel where you learn various strategies on how you can become consistent as a trader. So do well to check it out after you are done watching this video. There are a few things you need to learn from this video, which is very important. As we move on, if you find it interesting, do well to like the video just to say thank you.
Show where we discuss everything day trading to keep you profitable on a consistent basis. So most day traders, when they're starting out, do not have $10,000 to open up a brokerage account and start trading the markets. If they do and they're new, 9 times out of 10, they're gonna blow that account and never look at Forex again. I don't think you can lose that amount of money and then come back to it again with the same amount unless your mental game is really, really strong. A lot of traders have a tendency to revenge trade. Like they lost their money, so they're gonna try to win their money back. No. That's not the way to think about it. You lost that money is no longer yours. You need to start over. Take the L and the lesson and move on from it. Before we get into this video, what I'm gonna discuss is extremely reckless and against every day trading rule. So if you are new and unfamiliar with risk management, please watch this risk management video first. It is my story of how I lost a lot of money in the Forex markets. I am not suggesting everybody do this. This is the disclaimer. Do not do this. This is not financial advice. This is just a strategy that somebody could play with, not like their main focus, but just a strategy that they could play with on a demo account to see if they can quickly grow a Forex account. And if you are good enough and you have the experience and you have the time put in the charts and you know what these prices do at certain times of day, you could actually eventually do this on a live account, but it is completely at your own discretion. This is extremely risky trading, and I can't stress this enough. You probably shouldn't do this, but I'm gonna show you how to do it anyway. Okay, without any further ado, let's jump into TradingView and take a look at how this works. So in any Forex market, this is GBP, JPY right now. You see, the ebb and flow of the market. You see spikes, you see retracements, you see all of the things. This is on a 1-minute time frame. There's a lot of noise and movement on a 1-minute time frame, and you also have these huge spikes and drops that happen randomly. These are usually news events, but you can't really anticipate how much and how quick it's gonna happen. I mean, just for example, this one-minute candle was 70 pips and it happened in 60 seconds. So why am I showing you this? I want to show you that depending on the currency pair, these moves are enough to get 20 pips. So let's draw out on this chart what 20 pips looks like. It's that big. This amount of movement is 20 pips. So I'm gonna draw a box that's essentially that long, okay? This is gonna be our reference point. Your goal is to get 20 pips out of the market. You could see you got it here, you got it here, you got it here, you got it here. Like it's quite consistent to be able to get 20 pips out of the market if you know where to enter and what to look for. This is a weird thing that I found on the internet. It is called the 20 pip challenge. Stick with me on this. This is actually, in my mind, it's extremely smart, because imagine if you had a $10,000 Forex account and the standard way of trading is risking 1 to 2% per trade. So you're risking $100 to $200 of your money per trade in hopes that that trade will work out and you will win, and then you'll grow your account slowly over time. Essentially with this, you can start off your Forex account with $20, 20 euros, 20 pounds, whatever, 20 of the big currency. Each trade, you're trying to get 20 pips. If you get that 20 pips at a specific lot size listed on this chart, trying to increase your account by 30% per trade. So you start off with $20, you want 30% growth, so that means your profit goal on that trade is $6, and the lot size for 20 pips is 0.03. You get that $6, you add it to your main account, and you try to get 30% of the next one. The next trade profit goal is $8 for 20 pips, and so on and so forth. I'm going to put this chart in my Discord group linked down below. If you would like to download this or have access to it, then you can adjust the numbers with whatever you want to do. But essentially, this is the power of compounding. So you're gaining 30% on your total account balance. So $20, 30%, your new account balance 30%, and so on and so forth. These first few numbers may not seem dramatic at all. Like you're like, oh, cool, I'm gonna get $6. It's not that big of a deal. But as you keep increasing your lot size, trying to get the exact same 20 pips, you can see as your account grows, this number gets dramatically bigger. By the time you're on trade 15 to 17, you're looking at $200 to $300 per trade that you're getting. One trade, $300. Then once you get to the higher rankings, this is where it gets absurd. Level 22, you're getting $1,400 per trade. Level 28, you're getting $7,000 in one trade. So this whole thing is taking $20 in 30 successful trades. Like they have to be successful trades. They have to be winning trades. After your 30th trade, you will have an ending balance of $52,404. Now, why do I say this is reckless? Because the standard way of looking at trading is risking 1% to 2%. You're risking 30% per trade. So you can see here, I have these numbers adjusted. This is your profit goal, but this is where you want to limit your losses. So if you get to this point, you close the position and you go back one level. So say you're on level 7 on this, and then you do a trade and it fails, you only lose $22, bringing you back to level 6. What I like to do is once you've completed a trade, mark it in green. I have a column here for if it's completed or not, or how many times you've done it, and then notes. Every single trade you do, you should be keeping a trading journal. Why you got in on that trade, what time frame were you looking at, what indicators were you using to let you know that the trade was going to go in that direction. This is going to help you determine why you're losing trades and why you're winning trades, so you can focus on the things that are working and try not to do the things that are not working. Now, this is do not focus on this as your main source of income. This is a side project that you could possibly test on a demo account. So I did this, I have my main, trading account, and then I started doing this just for fun. I got up to level 15. I was at $788, and I was like, this is cool. I can do this. I'll eventually get to the end. And I swear at that point when I was like, oh yeah, this is easy, I immediately kept losing trade after trade after trade after trade after trade, and I got down to level 8. Now you might be saying to yourself, that's crazy, you lost $600, that's so reckless. Yeah, but my original risk is only $20. So if you think about that in comparison to a $10,000 account where you're risking $100 to $200 per trade, that risk is 10 times higher than what you're risking here. So there is a micro and a macro way to look at this. Micro, you're risking a lot. Once you get to these higher levels and you lose $3,256 on a trade, that is huge, and that is a micro huge loss. That's a gut punch. If you wake up and you have minus $3,200, it's gonna hurt. But macro, if you think about the big picture, you're only risking ever this $20. So even if you're here losing $3,000 or $7,000 a trade, you have to keep it in your mind that this is only $20. This will keep like the bad psychology of trading that like really hinders a lot of traders out of the equation, because you're not like, this is basically demo money after a while, because you know it's only $20. So if you lose 5,000, it's like losing a trade on a demo account. It doesn't hurt. It doesn't like gut you. Getting back onto TradingView, trying to get this 20 pips out of the market, you're gonna have to have a really good strategy to do so. As you guys know, and by the name of the channel, I like moving averages. I think they are the best way to trade. It shows you where you're seeing strength and resistance, as well as seeing momentum. Like if you see this parabolic spike, you know the momentum's to the upside. So how to get these 20 pips out of each one of these moving average cross moves or rejection on the moving average? What I suggest is you go watch this video right here. This video right here is a strategy on my 3-line strike. So basically you're waiting for 3 subsequent candles in a certain direction and then a big fat engulfing candle in the opposite direction. That is gonna be your entry point on every single trade, with your stop loss above or below that big engulfing candle. So if it was bearish, like going down, it would be just above it, and if it was bullish, it would be just below it. So let me show you what this looks like. It doesn't matter if it's 5 or 7 or 12 consecutive, candles in that direction. The last 3 have to be the same color. So we had a bullish candle, a bullish candle, a bullish candle, and then we had this big fat engulfing bearish candle. You get in on a short position. Your stop loss is above that candle and you're targeting 20 pips. So as you can see with this strategy, you're not risking the full, like on my chart here, like this risk dollars. So if you're doing a 0.03 lot size, your profit goal is $6. You are not risking a large amount with that tight of a stop loss, because this is a sniper entry. This is gonna give you a really, really good entry. So even if, say you're on level 9 and you lose a trade, you're not gonna go all the way back to level 8. You'll just lose a small percentage of that because your stop loss is super tight. These are my sniper entry techniques. So we've dragged this profit level down to 20 pips. Let's see if this thing played out, and eventually it did. Let's see how long this took. 2 hours and 44 minutes. I'm telling you, this strategy has to be my favorite. It's the 3-line strike. Again, it will be linked in the description, so use that with this challenge. And you can take $20, and if you don't get too emotional, you could bring it up to $52,000. Again, this is not financial advice. I am not a professional. I'm a YouTuber making videos on how to teach you how to trade. Educational purposes only. Try this on demo. That's 0 risk whatsoever. And if it works and you do the whole challenge on demo, then maybe consider trying it on live. Okay, I'm done. That's it. Like, if you guys got some value out of this video, make sure you're smashing that big fat thumbs up button down below my face. If you have not already, consider subscribing to the channel. It really makes me feel good about myself, and I will see you in the next video.
The amount you are risking, that's in, let's say you start with the $20 challenge, right? And you're able to scale up to like level 15, level 20, and so on. Any amount that you losing there is not the real amount, right? Because remember that the initial capital is just 20, right? And so any amount that you lose in the future is just an additional profit to that your initial capital. So you don't get moved by emotions if you must get to the end point. Now, explaining the moving average is trying to say love the moving average. As a matter of fact, that's the name of his channel. Now this is it. So you can see that you can literally double your account. So don't also forget to subscribe and like this video. Now his channel, I'll drop this particular video link in the video description so you can access his channel. Do well to subscribe to his channel as well. As you do subscribe to this channel, let's get this channel to like 500 subscribers, and we are good. Let's roll it.